Hello traders, Gary Wagner here at just about 12:30 in Honolulu, 6:30 in New York. It is Tuesday, 14th day of April, 2020, and this is the Daily Report for Gold and Silver. Interesting mix in the precious metals markets with gold futures trading lower on the day, but the rest of the precious metals futures complex all trading higher. Platinum, in fact, gained about 9% on the day. We'll cover that as we go over our price board. On today's show, I want to take a look at the most current resistance and support levels because today, even though gold closed lower on the day and now in Australia is a little bit below that, currently at 1756, we had to address the new record high that came in trading overseas last night at 1788.80. That being said, let's take a look at our price board and then to our technical studies. An interesting day when we look at the precious metals markets, with gold futures hitting a new yearly high at $1,788.80, but closing lower to the tune of approximately $6 on the day and is currently fixed at $1,755.60. When we compare spot and futures pricing, as we talked about in our opening letter, spot is up $14.10 on the day, a gain of over 0.8%, and is at 1726. And that means the spread between futures and spot contracted today, and that's after a long round over the last week and a half of that particular spread widening. The other thing that's quite interesting is that we see gold futures trading lower against a backdrop of a lower U.S. dollar, a weak U.S. dollar. And it's also the only precious metal in the futures complex to close lower on the day. Platinum had the most sizable gain today, gaining 9.28% and is currently fixed at $819.40. Palladium gained 1.22% and is currently at $2197.10. And silver had a stellar gain today, back just fractionally above 16 after accounting for today's 50-cent gain on the day. And as I said, that's all within the context of a weaker U.S. dollar now on its second week of lower pricing overall. Let's take a look at our technical studies. The first chart that we're looking at is a split chart with the dollar index on the top, spot gold pricing on the bottom. What is clearly apparent is the fact that we have seen gold moving up, and that's as the dollar, which it is paired in, has been moving to lower pricing. After hitting this top at 101, again, this is a 60-minute short-term chart, we saw the dollar fall from grace and is currently now below 99 at 98.88. We're looking at a daily chart of gold futures. It references the new high made today and the adjustment of our current Fibonacci retracement reflecting that, because we now have our top at 1788. And of course, the beginning of the leg of this last rally began on the first of the month, so that will remain constant. One thing that's noticeable is 1788 and 1575, the high and the low between this period, is approximately a $213 differential. That's quite a move in terms of the range in just under a half a month. When we look at this, we see that dynamic support could occur if the market should fall from this point at either 1739, the 23% Fibonacci retracement, and as low as 1707, which is the 38% Fibonacci retracement level. We are thinking about adjusting our stops, and the price point that I'm looking at is just below 1739.50. Of course, that is the 23% retracement. We will send out a trade alert to that effect when we recommend it. Lastly, I do want to take a look at a daily chart with different levels of major and minor resistance, as well as minor and major support in the market. We talked about the fact yesterday that 1774 was a pretty critical level, and that really is based upon this top that occurred yesterday. Today we made a higher high, but the market closed well below that, and still above minor support levels that I believe are at 1751, with major support coming in at around 1723.70. Maintain your current long position. Maintain your current stop until we send out a trade alert, which should come within the next 24 hours or sooner. This has been Gary Wagner, wishing you, as always, good trading. We'll talk to you tomorrow for the next daily update and review. Bye-bye.